Good day. Ira Epstein with your metals market update, and this is for Wednesday, October 2nd, 2019, getting on to 4:15 in the afternoon. So as we look at the metals, strong closes, but the market had given up a lot of this right into the last trades. I wouldn't be surprised if that when we reopen tonight after 5 o'clock, that they're down a little. Gold was closer to about $3 lower than this. Silver was probably another 7 cents lower. That doesn't mean it's going to do that, but I'm just telling you what I was noticing right at the end. The stock market, a big down day today, as you can see. And the question, of course, is what's going on? And what's going on is U.S. economic data has finally begun to catch up to the rest of the world as their PMIs and the like have been falling, and now ours are starting to fall. We saw today the ISM report come out in New York, and boy, it was a 42 number after a 50 number last time. That's a huge decline. It means a lot of contraction in theory going on. Does one number set a trend? No, but we're watching construction, manufacturing, all this activity going on. And as I said today, when I was on CNBC, I said that, you have to remember that manufacturing and so on in the U.S., while it's a big economy, it's not the major part. It's our consumer spending that's everything. So you got to keep your eye on that. Now, interest rate futures, they were up, as you can imagine, as the stock market was down, and that took the yield to about 1.6% in the 10-year note. So as we look at the gold, we've been coming back down. And it's been a controlled break. The market's not accelerating. It's down $25 from its most recent highest weekly close of 1526.60, around 1501. As you can see, we're getting a bounce in the market, but you've got a lot of resistance layers to get over. If you're really going to start a thrust in this market, it needs an event. You might say this is it, and I'm not certain that I agree. I could have seen, in fact, I could have made a strong case with the stock market on this 2-day decline that you'd be up more than you were. When I look at the swing lines, which is a technique, or maybe I should call it an indicator that I wrote many years ago so that my then young son, he's a lot older now, could understand what a trend is. And simply put, what this indicator does, at least for me, and it's what you're welcome to use it in our charting software, is it helps define if you're making a pattern. Now, in this pattern, you've got a higher high and a lower low. In a charting pattern, that is not called a trend. A downtrend would be lower highs, lower lows. An uptrend would be higher highs, higher lows. And if you watch financial TV, you'll hear people talk about that repeatedly. So this is not a trend. This is a market that started a vertical decline, and now what we're getting is a bounce in it. Where might the resistance be? Well, one of the things that you'll hear me say here over and over is that I think the 18-day moving average of closes is a line in the sand. When the market is under that number, it gives me downside bias. When it's over it, it gives me upside bias. What else? When the market's well over it, it's not uncommon to pull back to it to see if the market's got support there, under it, pulling or rallying back up to see if there's resistance, just as you're doing right now. So I'm going to call that part of the market neutral. What did the market do? You'll recall, we got and closed underneath the lower Bollinger Band at 1472.90, and this was Monday. We got a reversal yesterday where the market got back over it. And you'll often hear me say, the first challenge of a Bollinger Band, be it to the upside or downside, is where the pros take some money off the table. Is it always a correct thing to do? There's nothing that's always right or wrong that I know of to do, but it's a probability that's going to happen. And that's why I look at it there and down there. If it bounces, often, not all the time, I look for the market to get back to a key moving average. Well, the 100 days under the market, this is the 18-day, and it's back in the range, so that would be the average that I'm targeting. And that's what I'm looking at. So I see a market that's fairly neutral right here. And when I look at momentum, here's how I'm defining it. Momentum was oversold. It's corrected, past tense. Both numbers are now no longer under 30. I consider any reading under 30 without both numbers going that make it up sideways under 20 to be oversold. It has corrected itself, and I see neutral territory right here. When I look at the GLD, the popular ETF, let's come back like we did. The market last week got down on Monday. I said last week, it's Monday. It seems so long ago already. To the lower Bollinger Band, held it both yesterday and Monday, and then today back and stopped at that 18-day moving average of closes. The trend in this market, I don't see one. And remember, we had this outside day up that I'm pointing to you right here. When you took that out, as far as I'm concerned, the chart got destroyed. And it's what I call, and it's very unprofessional, an ugly chart. And I never quite know what to do with that. So I wait and let the market reset itself, and that's the process I think it's going through. You have the same problem in GDX. Now, part of these problems, and the reason that they can sometimes change a bit, is stock indices close at 3 o'clock and the futures markets, and I'm saying these, and I'm talking Chicago time, 3 o'clock that they're finished, whereas the futures markets at 12:30 p.m. Central Time, that is their settlement, even though they'll trade to 4 o'clock. And the charts get different looking from that. I'm going to look for resistance up here. Oversold market, again, not in a trend. The gold-silver ratio, well, it's in a corrective mode, but it still favors the gold at this point as prices are over the 18-week moving average. I'm sorry, the 18-day moving average of closes. Then we get to the silver. And like the gold market, it had come down, it had challenged the lower Bollinger Band, had a day under it, closed back over it yesterday, coming up. But I see resistance at the 1794.50 level. And the reason is you have a pattern of a higher high and a lower low. Still no trend, but unlike gold, it is still in an oversold condition. You have these market prices still under 30, but not both of them staying under 20. Therefore, it's just oversold. In the copper market, well, yesterday the market came down, had a big washout in price, and I know we said this yesterday. Then it came back to the Bollinger Band, and today you're getting a bit of a bounce. It's oversold. I don't know if the pros will want to be aggressive then on the short side of the market if it rallies into the 18-day average of closes. Oversold conditions either correct themselves by market correction to the upside, sideways action, or becoming embedded. Embedded meaning both numbers go under 20 and stay there for several days or more. Well, you're not embedded. So this is the beginning of the corrective process, and it can either be sideways action or a rally. I don't see what's there to rally this market sharply. That's the problem I'm having in all the fundamentals that I'm looking at. And no, you're not going to get much news out of China. They're basically closed down in their financial markets until October 7th. In the platinum market, you came back, and look where you're fighting, right at that Bollinger Band to get back within it. Now, we had been under it yesterday. We were under it the day before that. And here we had managed to just close over it. You can see that here. So you had 2 days underneath it, and today you're fighting to get back over it. And that's basically what occurred. It's not a strong signal. You're in a downtrend. Resistance, I'm going to look at the 18-day average of closes. But similar to what I just said in copper, you're very oversold in this market, like in the silver. Then we get to the palladium market, which rescued itself today. We lost the embedded reading yesterday, which often leads to price and the 18-day average, making a run at each other. But the only time you can rescue and keep the reading embedded, according to my rules, is the very day after you lose it, you have to keep it lost. You didn't do that today. The market came back, and that was a trap for the bears. Notice it did make the run towards the 18-day average. It missed it by, well, let's see, that was 1610. 1613 was the low, so it certainly extended itself. It is the first sign the market is weakening. So I'd be concerned. The market got a bit of a boost today because it appears that in South Africa, what's going on in the mines there is an argument between palladium, platinum producing, and so on that is going on, that's going to arbitration. Will some of the platinum mines close down? That could be the case. Could affect other mine products. When you get to the dollar index, notice how the market was up and over the upper Bollinger Band. You had 4 days in a row. I think on this day, in fact, on the fourth day, I said, the odds of it being over, it's 1%. You've backed off, but you're not collapsing here. This dollar's not gaining acceleration to the downside. It's still very much a market that's got higher lows, higher highs. Yes, it's hit some upside targets. It's correcting an overbought condition, but it is certainly not in the bear camp that I'm seeing as a market technician. You hear me talk about all these indicators, and you may want to know how to work on some of them yourselves. And what is how do I say this the right way? The educational way of explaining them. Well, we've put together 2 brochures for you with our good friends at Modern Trader, which is Futures Magazine. And it covers all these different topics. And with them, you're able to get an idea of what Elliott wave is, what a GAN is, price time, market sentiment indexes. You go on, an options primer, money management. So if you'd like to get this primer, and each one's about 20 pages long, how we send it out is via a PDF to you. You print it out if you want to, you read it on your screen. But it's nice to have for your library. Simply go to our website at www.iraepstein.com. You'll see our free offers. Just click that. It'll take you right to the page that you need to sign up, and we'll get this to you by email right off next business day. You can click up here if you're watching me on YouTube. It'll take you there as well. I'm Ira Epstein. Have a good day. I'll see you tomorrow.